Gold is in trouble and looks to be heading lower. I'm your host, Steven Van Metre, and thanks for joining me for part 2 of the Sunday Chart Show, where we've got gold, gold miners, silver, dollar, bonds, and the energy sector. Let's start it off with GLD. We see the relative strength indicator here, the RSI, momentum indicator. Notice price flat and momentum starting to slow down. And in the past, it's been okay because price has been trending higher, and you can see where momentum is kind of just going sideways, but price has been with it. But if we see momentum start to weaken, the RSI continue to fall, particularly break below 40, well, then that means gold probably headed lower. How about the MACD leading this effort down to the downside? Notice that the black line, the MACD line, well below the signal line, is showing no signs of bottoming, again pointing to perhaps lower gold prices. And how about Momentum Timer Pro? It says 4 consecutive sell signals. And remember, this takes into account the RSI, the MACD, and MTP's own proprietary indicator. If 2 of them are positive, you got a buy signal. Otherwise, you see a sell. It was telling you to get out. When you see it choppy like this, it just says hang tight, don't try to trade this. Remember, this is still free. There's a link in the corner and the description below. Still, why I do that, I don't know. How about we look at the longer term picture here before we get into the charts? We see 21-day, 50-day, 100-day moving average all trending higher. That's what you want. Momentum is still behind the 50 and 100-day. That's a good sign. Perhaps if there's any indicator of weakness, you see it on the 21-day there, and it's just sitting below its 21-day moving average. Not really a big deal. But let's look at the longer term chart. And what do we see? There's plenty of volume support here on the 2-year chart down at 1800. But notice, I want you to see the parallels between 2020 back in August and now is notice price shot up, it came down, and then went to this chop fest. And there's a 21-day moving average in red. And it was sitting below it. Now, it had brief moments it would get above it, but the 21-day moving average rolled over, and that sent gold down. Look right now, what do you see? The same story here, 21-day acting as resistance as buyers keep coming in, telling you the sellers are dominating gold here. Let's go on to gold miners. Perhaps they give us some hope if you're bullish on the metals. And notice here, we've got the relative strength indicator went from overbought here over 70 and still sitting in a very healthy 64. 40 is the danger zone. And look, price is still headed higher. So that's a good sign. How about the MACD? People bailed on this if you're trading the MACD only. And then you notice price went up. But if there's a little bit of hope here, you see the MACD line just starting to curve higher. Hopefully, if you're bullish on this, it breaks through. Otherwise, if it gets rejected, well, then that means miners are going to do a hard reversal here in price. And how about MTP? It said don't follow that MACD on by yourself. You got to have more signals than just one. Holding 38 consecutive buy signals. Perhaps that is a contrarian indicator now. Let's look at the bigger picture. 21-day, 50, 100-day moving, all averages all rising. Momentum behind them. That means the price is accelerating to the upside above all the key moving averages. Everything you want in terms of bullishness. The question is, can it hold it? Notice it's in this resistance zone. So now all of a sudden it's running to overhead resistance. You got support down here at about 34.69, that nice red zone. In fact, you could draw your bar up into the 35s if you wanted to call this a supply zone. Right here around 35.48 would be solid. But the question is, can it get above this $39 range, right about out of 40, or is this resistance? And this too follows gold lower. Now, normally we see the miners lead the metal, but in this case, we've seen the metal lead the miners. So tighten up your stops if you're in GDX for sure. How about silver? A little bit different story on silver. Momentum is waning quickly. RSI down to 46 and looking like it's heading lower. Price, unlike gold, which was kind of going sideways, price now for silver headed lower. Let's take a look at the MACD. And what do we see here? Of course, that broke down way back here in early March. And it's in signaling the price is headed lower. Momentum Timer Pro, 4 consecutive sell signals. Notice it's got a sell, buy, sell, buy. I mean, it's chopping all over the place. That's generally a sign you probably want to hold back and wait for a cleaner signal. Price on the moving average is still bullish. Momentum is starting to break. Moving average is starting to break. The longer term momentum is because silver's gone sideways so much. Not really a big factor here, but what do you see in silver? Let's go down to silver futures. You got a ton of support here sitting at 24.09. In fact, you can draw that support up to about 24.50, right around where the 50-day moving average is. So the bulls are going to look at this and say, hey, this is a bull flag for me here. You got a flagpole, a bull flag, just needs to find some support on the moving average, and it could do that. It's sitting right between these supply zones. So could it further come down to, again, kind of right around 24.38 and somewhere in there, shake people out by, breaking the 50-day moving average? Or maybe he comes all the way down to the 200-day moving average and then makes another run at 27. Keep in mind, it is moving into a buy zone now. If we zoom out on this picture on the 2-year chart, notice buyers were here, sellers are up here. So as long as the buyers are back, expect them to show up somewhere, maybe in this $24 price range as price comes down and make another run at 27. For the moment, it's bearish, but could turn bullish really, really soon. All right, let's take a look at the dollar, the one thing that could wreck this whole picture for the markets. And let's see what we got on the relative strength indicator. It's come down to 50, and that's not a big deal. We've seen in the past where the dollar kind of got almost overbought, pulled back down, price came down a little bit, held around 50 on the RSI, and then shot higher into oversold or overbought. Again, to get that backwards, overbought condition, drove prices higher. Here we see a similar story building. Perhaps as long as 50 in this range holds, could make another move higher in price. How about the MACD? It's telling you no, this thing's headed lower. But if there's any hope, if you're bullish on the dollar, you see the black line, the signal line, the MACD is starting to show some signs of slowing down, the momentum on it, and maybe curving and bottoming out. But the MACD on itself, tough signal to follow. You've got 3 consecutive sell signals on UUP. So if you're bullish on this or you're looking at security, wait till Momentum Timer Pro flags the next buy signal. There's your key to enter. It'll highlight in gold. How about the US dollar? Big picture, price bullish, momentum bullish. Everything's good except it's below a 21-day moving average. And let's head over to the charts of UUP, where it is. There it is. And there's tons of support here at the 6-month line. You see right here at 25.75. How about the 1-year price? Same thing, 25.75. 2 years, just a little bit below 25.28. So this is pretty bullish. So zoom in to the 10-day and you see, boom, price below. So every time prices come down, it's being bought, telling you that this is likely just a consolidation at the supply zone here. So at 26, this $26 range is a supply zone. Let's zoom out to the 5-year and you can pretty much see that this area here does get consolidated. The trend is your friend. Look for it to head up into the $26 range. Let's look at DXY. Many of you watch this instead. It's heading up probably, again, 100. I mean, you're going to look at this thing, get back to where it's pre-pandemic highs, and that's, or well, actually it's above that. Your post-pandemic highs now from that big price move. That's where the dollar is. Financial conditions are tightening. You know it's coming. And let's move on to deferred dollars or bonds. Of course, Bond King, we know, loves duration even when it bites him in the face. How about this? RSI 47. It's building steam. Didn't get oversold. Is this a fake out? But it could be. How about the MACD? Got a positive crossover. It's heading higher, so that's bullish. How about Momentum Timer Pro? 2 consecutive buy signals. So when you see a sell and then a buy, that's usually your indicator to take a position. Longer term picture, it's pretty ugly. Price on all the moving averages is headed down. For some reason, momentum behind the 50 and 100 days still remains bullish. I am a bit surprised by that, just between you and I. Let's take a look at TLT. And we know it got way down here. Many people said at that point it was going down to 121, and it could have. But it held right above this big supply zone where buyers were previously at, and now it's starting to build back. There's not a big supply zone here, meaning price could quickly move up into the 135.50 range and find the 15-day moving average. Now let's zoom in. So that would be pretty bullish. If you bought on this trade through Momentum Timer Pro, that's what you're looking for, is a run up to the 50-day moving average, because usually the first move on a bottoming pattern, you see one here, gets rejected there. So you're hoping now you get a move up there. Perhaps that gives you an indicator to jump out, and then the 21-day you'd be looking for it to bottom and roll up. That's what you want. A lot of overhead resistance. Let's zoom into the 10-day, and there you go. You finally have got this signs that this is indeed building out as a bottom, because The volume profile line is now above all of these bottoms. That is a good sign, exactly what you want to see. How about we wrap up with the energy sector? This just seems to be continuing to go higher. RSI sitting at just under 60. Overbought conditions don't seem to matter. It's still setting at a healthy level, momentum behind it. MACD, I made some notes. People that have sold to here, they would have rebought here at a higher point. Then they would have sold to here, rebought at a higher point, and then sold again. Again, this is why I don't like just using the MACD. It just doesn't make sense. Momentum Time Pro holding 11 consecutive buy signals on XLE. How about longer term picture price bullish? Momentum, everything's bullish about this. And let's see where it's sitting at from the bigger picture. And we're going to have to zoom out to the 5-year chart on this, because what you can see is this is where it's been sold before. We have to maybe go out even bigger than that. Let's go to the max weekly chart. And now, what do you see? Every time XLE gets near 78 to 80, boom, sellers, 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 and sellers. So could it make a blow off move higher? Yep, but that could be the blow off move right there. Let's look at the 6-month volume profile. Deep there at 57. Let's zoom in, see if the 10-day is above. There's a battleground. So watch this. If you're in this trade, well, then you certainly want to tighten up your stops, because, well, the risk now is to the downside, not the upside. Hey, and with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Thanks for supporting the show. I appreciate you. Bye now.